Thank you for attending the workshop. And just I want to have like a round table of introduction. So I will start with myself to know a bit of the audience. So my name is Gasser Akila. I'm head of product and data at DSquares. DSquares is one of the leading loyalty programs. I believe you attended the session for Marwan, our CEO, on the stage. So one quick question: how many from here is on the vendor side, and how many is on the client side? I'm a vendor. So start with the client. Okay. So client. Okay. And on the vendor, I believe is the rest. Okay. So we have like a 50-50 distribution here. Okay. So actually, I want it to be more of a discussion and a workshop. I don't want it to just give you a lot of content because I don't have much. But actually, I want to be engaged because it's really an interesting topic for me. One of the main tasks when I came to DSquares like 3 years ago, one of the main tasks I got from the CEO is to work on this aspect, which is the loyalty ROI. But before going into the topic itself, I want to give you a bit of an intro about DSquares. How many here knows about DSquares or heard about it? Good. Okay. Yeah. No problem. So DSquares is a company that was started in Egypt like 12 years ago. And we started working in Egypt for like 3 or 5 years. Then we started expanding into the different markets. It's mainly, we are one of the leading B2B loyalty solution providers in the region. So we have like 9+ operating offices in the Middle East. Egypt is our headquarters, along with KSA, our headquarters in GCC. We have clients in UAE, Jordan, Iraq, recently Kenya, Tanzania, Morocco in North Africa, and Europe. We have a client in Romania, which was Vodafone Romania, and our holding company is in Netherlands. Basically, we have like 60+ clients in multiple industries and multiple countries, starting with the telecos, banks, Visa, MasterCard, with a lot of multiple banks. As we can see here, Crédit Agricole, these are some of the biggest banks in Egypt, along with Al Rajhi in KSA, with the Riyadh Bank in KSA as well, along with some of the retailers, government, oil and gas. We are actually working with ExxonMobil, one of our biggest clients actually. We are working with them in like 7 countries now. We started in Egypt, then we went into KSA, then we started replicating this model in 5 more countries in the GCC. And this is just a sample of our merchants. We have more than 21+ K+ local and international merchants. I don't want this to be a pitch deck, but just will reflect on it in the session. What we provide usually is an end-to-end loyalty. So we don't only provide the technical part and of the solution. We provide the end-to-end, starting from the strategic planning and consultation, going into the technology part, which is, I believe, most of the vendors here provide. And then also we work with our clients on getting the best merchants, negotiating with the merchants, and so on, and the part related to financial reconciliation, onboarding, training, and so on. And then going into program management, operations, on-ground operations, whether on tactics and campaigns and so on, and also working with our clients as well to make the program successful. So basically, we start from telling our customers or explaining to our customers what is loyalty, up to getting them to being the best loyalty program in the world, like what we did last year with ExxonMobil. Don't know if you know this or not. We were awarded best B2B loyalty program with ExxonMobil Egypt. So actually, we went through this whole journey with them. Why loyalty? I believe most of the vendors here have this slide, and I want to reflect on this. These are most of the clients or most of the vendors have one slide like this. Some metrics that are increased or decreased using loyalty, and whether it's increasing customer retention, development in the customer revenue or the ARPU, or increase in the repeat sales and so on. But what I want to reflect here is how these metrics can be built and how these can be calculated. Because if you are on the client side, definitely you want to have something like this to be able to sell to your management that loyalty is not a cost center, which is, I believe, most of here suffer from this. It's not a cost center, it's actually a revenue generating resource. So let's see how this can be done. So as a start, loyalty ROI is not easy actually, because it is a hard task. It includes a lot of data analysis, a lot of tactics, a lot of experimentation that needs to be done. So let's start with, I have some issue with the screen, so I will keep alternating. So I believe most of you maybe saw some of these metrics before. CLTV, customer lifetime value, repeat rate, average order value, redemption rate, incremental breakage rate, points breakage rate, and so on. These are maybe some of them are complex, some of them are not easy, some of them are a bit straightforward, but we usually suffer how to convince the management, whether on the client side or on the vendor side, that these metrics are really influenced by loyalty. Actually, let me go for one thing. Some of these metrics are directly influenced by loyalty, and some of them may be influenced by loyalty. For example, NPS, Net Promoter Score. Anyone here can say NPS is for loyalty. So all the customers who are engaged in the loyalty program, definitely their NPS will be higher, which is not always the case. Me personally, I can debate this. Maybe we have like an ATL campaign that we launched with a big celebrity and it increased the loyalty, the NPS. Maybe we have a good customer care. Maybe in your case, we have a good customer care agents that always make the clients happy, and so on. So it's a bit debatable. Something like the CLTV. CLTV is one of the most debatable metrics, whether it is increased because of loyalty or because of other tactics that can be done. Maybe you have a campaign or an offer that was very good and it increased the CLTV. Maybe you have a good product that automatically makes our customers stick with our client or with the product and make them always purchase and so on. Total sales, for example, definitely it's also maybe influenced by loyalty or not. And last but not least is the average order value, which also can be influenced by loyalty or not. For the metrics that are directly influenced by loyalty are like the redemption rate, for example. Who here knows the redemption rate as a metric? Redemption rate is basically, for those who don't know, redemption rate is how many of the points or of the monetary value of the points that were accumulated by customers are already redeemed. If I go a bit too technical, please stop me and ask if there is anything that is not clear. So redemption rate is mainly how many of the points or the monetary value of the points are automatically or are already redeemed by clients. Then we have the offer conversion rate, which is definitely influenced by loyalty. If I have an offer that, let's say, buy one, get one, let's say I have an offer, if you purchased a specific product, you will get a 30% on your next purchase. So this is definitely influenced by loyalty. So we can easily claim customers who already are loyal to the brand or are engaged in the loyalty program, definitely they will have better conversion rate than other clients. Retention rate, how many of my customers or how much of my customers are stick to my product or my brand, how many of them come twice or thrice per month or per quarter, depends on the frequency. And last but not least is the points breakage rate, which is a bit also debatable whether it's a good metric or not, because maybe it is not a good metric that says not all of my customers are already engaged in the loyalty. So I need to work more on the engagement. Yes, it will have a positive impact on my revenue. It will have a positive impact that I accumulated a lot of points, but not all of them are actually spent by the customer, so I'm saving on budget. However, it's a bit risky on the engagement level of the loyalty program itself. Okay, any questions on this part so far? Anything not clear? Perfect. Let's see it in action. I will share with you now one of the dashboards we did with one of our clients, and we will go a bit step by step on how to work on this. Let me share my screen again. Is it clear? Do I need to zoom in? Okay, perfect. So, I have an issue with the light. Okay, so this is one of the dashboards we did with one of our clients, but definitely we played a bit with the numbers. We multiplied with some factors to make it just anonymous. So this is like the homepage we have for our client for how to calculate or how to convince this client this is a program that is already profitable for the company. For instance, this is a retail program. It was a closed loop. So the customers accumulate and redeem in the same retailer, and it was in the medical field. Okay, I will tell you why I got this example. So as a start, we started looking at the basic one, which is comparing the redeemers with the non-redeemers. How much or how good the redeemers are engaged with the program compared to the non-redeemers one. So we started with definitely the counts, active users, how many of our users, how many of the active users out of the total base, and how many of them are non-redeemer, and how many are redeemers. So if you can see here, it's almost 30% of the active base, or like 20% of the active base is only the redeemers. However, these redeemers are doing like almost 30% of the visits that they are using on this program, okay? And the revenue, the average spend per user is almost like double or 2.5 the spend of the non-redeemer. So what we wanted to show here is the basic comparison of the redeemers versus the non-redeemers, how many of them are spending compared to the others, and it reflects also on the frequency of the visits itself. Okay, then we started to here show some trend lines, how for the engagement over time, how the redeemers are increasing over time. It's a bit old, this study, it was in 2020, but it shows the comparison of the month over month so far.
Yes, can you give
Sure.
the scope is everyone is a loyalty member, and then within the loyalty members who have redeemed the points and who haven't. Any reason why you're not comparing loyalty members against non-loyalty members? Where is the value, which is what you're trying to justify, the value of the loyalty program?
That's a very good question, because actually in this program we have like an auto enrollment base, so everyone is a member. So that's why we focused only on the active users, to make sure that by definition of active here is at least he did one transaction, not only all customers who already enrolled, and definitely in this specific year. Any questions so far? Is it clear? Okay. So one of the major metrics here that we have discovered, that redeemers, although they are 23% of the base, but they are reflecting like 40% of the revenue. And actually the real numbers was like 60%, not 39%, which was a huge finding. And definitely when we were presenting this to our client, the CFO was there, and they started to challenge me. How you are saying that 23% of the base are doing like 60% of the revenue? That's why we started to dig more deep. So the main thing is, here we're just comparing the basic ROI for redeemer versus non-redeemer, but we didn't yet get into the details. Let's a bit dive more into the details. So we started then, one of the debates was, you are comparing the mass. All the customers I have, you are comparing redeemer versus non-redeemers, which is definitely by definition, the redeemers are more active, the redeemers they spend more, and so on. So we started to have like dissect the base into another sections or another segment, which we started comparison the repeaters. By repeaters here, the definition we said for the repeaters is customer that appears in more than 1 month. Since it's a client in the medical industry, so the frequency we expected is at least 2 times a year. So any customer who at least come for a month and then comes in the next month, we started labeling them as a repeat customers. Is this clear? Because we will start looking after this. Okay, so out of the repeating customers, we started to compare the redeemers versus the non-redeemers to solve the issue of the auto-enrollment of the program we have. So for the non-redeemers, we can find here that the total number of users is like also 30% or like 20, I believe it's 20%. 20% of the total repeat base, which was the full 508. We started to compare some of the basic metrics. The average spend, products, total number of visits, ARR, which is the annual recurring revenue, average product purchased, and total revenue, CLTV, average purchase frequency, average purchase value. Any of these metrics are not clear, we can dig in more. Okay? Okay. So what we can see here is some really interesting finding we started to show. So for the total number of products purchased by these total repeated customers, almost 30% of them was for the 20% of the base, and the total number of visits is almost like double. So this small chunk of customers are doing almost half of the total visits done by this by the other segment. Also for the total revenue, if you can compare, out of the 3.6 billion revenue in this year, almost 30% of them was done by like 15% or 20% of the repeat base. For the CLTV, it's clearly, definitely it will be much more. It's almost like 2.5x of the total base, and same for the average purchase frequency and the average purchase value. One very interesting metric that you need to measure when it comes about loyalty, and not only for the ROI but only for the health of the program, is the average time to redeem. When the customers, or how many months or days the customer will accumulate till he reach the first redemption moment. In this case, actually the real number, it was like 3 or 4 months, the average time to redeem. But it was a very interesting metric for us because we started to evaluate the purchase frequency of the customer before this redemption moment and after the redemption moment, and which was here. Almost average spending, or the ARPU, the average revenue per customer, before redemption, after redemption is like 30% higher than before while they were redeeming, which was also a very interesting metric for us to defend. This is also regarding the repeat customers. So we are still talking about the repeat customers. We are not talking about the mass who just come one time and didn't come again. Any questions so far in this slide? Cool? Okay. Then we started going into the cohort analysis. We started comparing, as we said before, in the retention rate, we started comparing customers who are redeemers and their retention, and how many of them comes back, like in the first month, second month, and so on, comparing them with the non-redeemers, and we can definitely see the huge difference in numbers between the redeemers and non-redeemers. Do you all know the retention cohort analysis and how it is calculated, or you want to have a quick explanation for? Okay, no problem. So it's the cohort analysis is one of the not easy actually metrics to be calculated, where we start to, for example, let's start in Jan 2022. In Jan, how many customers entered, or I saw them as the new customers only in Jan. So for example, let's say we are in a retail store, and we every month in Jan we find like 100K walk-in customers. Okay, we start with these 100K, and we see how many of them return back after a month, after 2 months, after 3 months, and so on. So for example, if in Jan I have like 100K customers, 20K or 21K of them I saw them again in the next month, then 17 out of the 100 I saw them in the third month, and so on. Which is, we can see the impact here. So customers who are already redeemers, they are already engaged, and whenever I saw them in any of these months, I see like 20%, 17%. Usually these numbers, it has to decrease over time, which is very clear. It depends on the industry and so on, but these were very healthy numbers compared to their already numbers before we introduced loyalty to this client. Any questions so far? Cool? Okay. So let's go back to the slides. Okay. So let's have, I just prepared some tips and tricks for how to build an effective loyalty dashboard. So first thing to start with is, what is the business goal, or what was the objective of building the loyalty program? Was it mainly for retention? Was it for acquisition? Was it to increase the cross-selling and upselling of other products, and so on? So you have to start with the business goal and start to build your dashboard accordingly. Then the second metric is to choose only the relevant ones. I showed here like 3 or 5 metrics. Most of them were relevant to the client, but not all of them will be relevant to each client. So you need to know what are the relevant metrics, what are the metrics that already measured by your management or by your company, and what are these metrics that already they have focus on. So it's very important to know what are the relevant metrics you have. Then you need to start segmenting your customers into smaller ones. So you can't have like a big chunk of metrics, and you tell them this is all the loyalty metrics I have. Most of them are positive, some of them are negative, and that's it. No, you have to dissect the customers into multiple segments, like what we did, redeemer versus non-redeemer. Then we started with the repeated customers versus the non-repeated customers, and start to dig deeper as you go. Then it's very important to focus on the incrementality of the metrics. So not all metrics have to increment because of loyalty. You need to take care of the seasonality. So for example, if we are in a high season, I can't claim that this was because of loyalty. The increment in the numbers was not because of the loyalty. Maybe it's some metrics are because of loyalty, but some of them are for the seasonality. So you need to work with your data analyst or data scientist you have in your company to start normalize or remove the impact of the seasonality in the numbers. Then try to keep it simple as much as you can. As we said, focus on the relevant metrics, 2 or 3 metrics per slide or 2 or 3 graphs per slide as much as you can to make sure that the audience are engaged with you. Also try to mix between, this is actually a very important one, between the emotional and the transactional actions. Most of the C-suite or most of the management will focus on the transactions. How much money I got because of the loyalty, how many, for example, the ARPU, how much was it increased or not. But it's important also the emotional aspect of it, because as we all know, because most of here in the room are expert in loyalty, one of the main impacts of the loyalty is the emotional part of it. So the emotional connection to the brand. So we need to reflect this between the like NPS, the customer satisfaction scores, and so on, and need to reflect it in the ROI, and try as well as we said to whether tested with control groups, tested in a small campaign, and so on, which will take us to the second point, is to test your hypothesis. So actually, when you work a lot with clients and you have like a hypothesis or a theory that this number was increased because of loyalty and so on, you need to test it with the client. So maybe start with a small campaign, take a control group, and see the impact of the numbers. And if it was positive, then go and test it across. So this is one of the very important aspects to work on. And try to make it like a story, more like a story, not just numbers. So if we have, like as we said, the hypothesis, so this metric, we assumed that it was increased because of loyalty. So we get a control group, we get a small segment, we try the campaign, then the numbers were increased. Then we started to roll out this campaign to all users, and then you keep your customer or your management engaged with the loyalty. Last but not least is try to automate this dashboard as much as you can. The dashboard I showed you before, I think we worked on it for like couple of weeks, 2 or 3 weeks, and it's not always available. The data analyst or the data scientist is not always available to work on this every month or every quarter whenever I have a review with the client or with the management. So try to automate as much as you can for the KPIs, since you will always learn as you go what are the important metrics, what are the metrics that are not relevant or the management they are not convinced about. And definitely your data guy, you need to be a friend with him. You need to just give him a coffee, give him a free lunch, and so on to make sure that he is working in your favor. Yeah. Last but not least is you can work with these squares, and we will do it for you. Yeah, that's it. I'm happy to have any questions for you. Thank you. Any questions, any comments? Was this relevant to you or not? I want to listen more about your struggles.
I think, when you mentioned what directly influences the impact of loyalty, and it was the KPIs based on the loyalty currency, I think that's clear. Yeah. I think the key word there is influence, no? Because when you talk to the C-suite, yes, you can tell them all the beautiful story, but they want to know really impact, bottom line, what does this bring you, no?
Yes.
So you can elaborate all the beautiful dashboards, but at the end of the day, you need to get to that bottom line number. And with loyalty, I think there is still that gap a bit on coming to that exact number in all aspects. So
Yeah.
a holistic view of what it's actually bringing to the bottom line.
Yes, definitely, but also something that you need to work with your management is that loyalty usually takes time to grow. So maybe it needs like an investment for like a couple of years to start seeing a real impact on the bottom line numbers. Actually, for the client we were pitching this for them, it was like the second or the third year for the loyalty program, and they kept asking us, what is the impact, and so on. We usually try to tell them it takes some time, so you need to bear with us. Unless they are seeing even a slight impact in the numbers, it will be okay. Then you will start seeing it booming. One of the clients we have in Egypt also is Vodafone Egypt. The loyalty in Vodafone started to be like an acquisition tool for them, not only a retention tool. So customers who are not Vodafone, they want to go for Vodafone Red, which is the high tier, high segment for them, because they want to be part of the loyalty program, because they have a lot of campaigns, a lot of cool stuff they work with to start having this. So some of the metrics, they are a bit hard to convince, but over time you will see this impact over time. And also definitely something also I missed to mention here is do some customer interviews. So whether on the NPS, whether on the CSAT, and so on. But it's important to have this on also a qualitative manner, not only a quantitative manner.
One of the slides I saw a term called points breakage. Is it the same as points expired, or is something else? And how does the client side sees that? Do they want more points to break or lesser points to break?
Yeah, that's a really good question. So points breakage is, yes, the points expire. Usually the CFO will want to have more points to expire, which is the logical thing to ask for, because they always, the finance guys, they see the loyalty as a liability. So it's in the books, it's in the P&L, many millions of points are there for customers who are accumulating. But actually, if you are a loyalty, whether a vendor or a loyalty marketer working at this client, you want to be a bit cautious about this metric. Yes, it is on the short term, it is a good metric because you are saving money. You are not spending a lot of money on the redemptions, but actually it indicates that your loyalty program is not that engaging for your clients. So you need to work more on this. And to be able to convince your CFO with this, you need to show him that whenever the redeemers increase, I am happy. So then you need to invest more in the redeemers, do more campaigns, get all your inactive customers who are not redeeming their points, and make them redeem, give them like double the points campaign for a limited amount, for a limited period of time, and so on, to start having this. But again, it will take some time. So start with the good redeemers base you have, who are already engaged by themselves. Usually you will have some ambassadors who will work with you on this. So start with them, prove the impact on this small segment of people, then start convincing the management, let's invest more in this, and so on. And this is actually typically what we did with ExxonMobil at the start. Because when you started with their traders program, they didn't know loyalty. They were a bit cautious on how much money we were spending. But whenever they started to see an impact, they started investing, and actually they started with us, tell us what is the proper budget to forecast for the next year for the loyalty. So for example, if they started with like $1 million for the budget for the rewards in the first year, we started doubling them in the second and third year as we go, because they saw a real impact. Any other questions, comments? Yeah, please.
Have you run across a situation where the numbers that you got from your dashboard don't align with real life beliefs or sentiments or preconceptions, and how do you bridge the two?
Perfect. Actually, when we worked with this client, the numbers were very positive. And for me, it wasn't logical. I started always challenging my data analyst. These are not okay. These numbers will not fly with the management, and so on. And that's why we started digging deep with each metric, and we started to validate them as well. Actually, most of them were right. He was doing the right thing, but we started to. This makes us more believers in the numbers. So we exerted more effort, or we put more effort to make sure that these numbers are right, and to have the good validation and the good reasoning behind. This is one aspect. The other aspect, I think you are asking that the numbers are not for the expectation, not above, right? Like they are under expectation.
Aligned, right? So the customer believes that they know their market, their audience, their expectation is X, and then the numbers come in and they're X plus 5 or X minus 20, right? How do you reconcile those two markets?
If they are under the expectation, I believe let's work with a small hypothesis and try to test it. Because, for example, you did a campaign and you expected a conversion rate of X, and you find it X minus 5, as you said. So we need to work on why the conversion rate was not right. Maybe there was a technical issue that we don't see in the numbers. Maybe there was an issue with the offer itself, and so on. So you start to, with a small base, test your hypothesis on, and see how the numbers will align with your expectation. This is if it was under expectation. If it was above expectation, as you said, then I believe what we did in this client make us more believers and make us more certain or sure of our calculations, that we started to dig deep in the numbers till we find the good reasoning behind each metric we have. Cool? No questions? Thank you very much for your time. Hope it was beneficial. See you soon. Thank you.